All right, everything looking good. Should be live any second now. We are go for launch. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. It is January 16th, 2022, 8 p.m. Eastern Standard Time. And I would like to remind you that because tomorrow is a national holiday, we will not have our traditional markets open. So they will be closed tomorrow for Martin Luther King Day, Martin Luther King Jr. Day. What's up, brother? Good to see you. Breaks in the chat. Coming through loud and clear, my friend. You can hear me all right? All right, so let's go ahead and jump right in and take a look. Obviously, there has not been a ton going on in crypto. We have been essentially just kind of trading sideways inside this range, which normally is not necessarily a bad thing, consolidation before a move. But to tell you the truth, we are consolidating below all the key levels. So in this case, the longer we consolidate down here, in my opinion, the worse it is. Because basically the indicator oscillators are trending up, but the price is just going sideways, and that doesn't look good. We do still have some daily bullish divergence. We're starting to build up a little bit of momentum, so there is still hope. I'm not giving up just yet, but unfortunately, we are below both of our 200 moving averages. The slopes are curving to the downside, and we are essentially just, we're looking like we're going into a bear market. I mean, you know, the 4-year cycle, the 200 moving averages, the loss of sentiment, the overall way that the stock market looks, the tightening of financial, fiscal and monetary policy, just doesn't look good for the valuations and everything going on for many markets at all. That does not, however, mean that there won't be ample opportunity for us to make nice trades, investments, and profits this year. So oftentimes, you know, the down markets are where the real money's made, because when the markets are going up, it's easy to just position yourself and kind of ride the wave or jump from, you know, one asset to another. But the truth is, when things are in, like, you know, deep value territory, putting in like cycle lows, all-time lows, or, you know, down 25, 50, 75% off of their highs, you can often find a company that's financials have not changed. They're in either as good a shape or better shape. Earnings might be going up while valuations go down. And we see like that multiple compression and present some opportunities, you know, basically for long-term investments, scalps, or swing trades. So just because the market's not going to be easy this year, which I do not suspect that it will be, does not mean that it will not be good or profitable. And the truth is, as the market becomes more volatile, a lot of times we will see more and more opportunity. And if there's one thing that we know, it is that we are amazing at finding opportunity. We have constantly been able to identify, you know, specific moves before they happen when just about everything else is going sideways. I've been able to get out of the way of big capitulation dumps in stocks and cryptos, been able to position ourselves for massive pumps, you know, not weeks or months or years at a time, but literally days before they pop off, 10, 15, 20, even 30 to 50, even 70% in some cases. So, you know, that is our goal here, to obviously make long-term investments, which, to tell you the truth, I'm making less and less of them right now just because of the current situation of everything going on. And in my opinion, now is a good time to have capital on the sidelines ready to deploy. But I am always accumulating long-term positions, you know, assets, etc., and, you know, scalping, trading in the meantime. So just because we're not putting up a bunch of passive investments and just sitting back and buying things at these overextended valuations does not mean that we can't take advantage of these opportunities. The difference is that we just have to be a little more dynamic in these markets. In my opinion, the days of, at least for the short to midterm, the days of basically just set and forget and then just logging in and checking your gains are over, at least for now. You know, it's becoming more and more evident now that basically after 2021 had ended and we look back and you look at the amount of people that entered crypto in 2021, record number of people, something around 50% of total people entered the crypto market in 2021. and we see that many of the cryptos are down after like January or February. So many of the cryptos people are down in, or they, a very common mistake is somebody starts off putting $1,000 into something, it doubles and they're at 2,000. So then they put in another 5,000, and then that 5,000 gets cut in half. So now they have the 1,000 that turned into 2,000. They have the 5,000 and the 2,000 that got cut in half, and now they're massively down. So it's very common. People lever up as things are going up, and then when the market turns, they're unable to identify it, and they end up losing more than they won. It's very, 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 very common. So, if that's something that happened to you or someone don't kick yourself in the butt for it or anything. But the truth is, learn from those mistakes. I constantly say on this channel that the number one most important thing is to invest in yourself. And in my opinion, the number one investment that you could ever make in your entire life is in your own education. If you take the time to learn a, skill or basically anything, you have that forever. You have it for the rest of your life. It's in your head. You may need to refresh it here and there. You may need to update it or sharpen it. But once you have that skill, it will benefit you for the rest of time. So if you're in these markets and you're in your 30s or 40s or 50s, you may have another, 50 years or 40 years or 30 years or 20 years left in these markets. So anything you learn over the next couple weeks, couple months, couple years is going to benefit you exponentially over your length in these markets and give you the ability to even identify one single amazing trade or investment, or to get out of one terrible trade or investment. It's going to exponentially benefit you in the long run. And the truth is, if you're not trading with more than a couple $1,000s, I mean, that's fine. You can play around, have fun with it. You don't want to spend half your bank on education or something like that, buying a course or something like that. I totally get it, but that's just play money. If you're looking to actually like build up retirement and invest in yourself, invest in your future, I think of it like a college education that you get for way cheaper. I mean, many people go to college, spend $30,000, $50,000, $100,000, $250,000, and don't get that much for it. So to think that you could just spend some time and a couple dollars to essentially learn key skills, in things like finance or global politics or economics, that to me just seems exponentially more valuable than learning about a lot of things we learn about. So, but that being said, invest in yourself, take the time, learn. Nobody can ever take that away from you. The truth is, a lot of people do forget that part of investing or speculating or trading is essentially like basically betting on someone else. So it's good to bet on someone else if you believe in them, if you trust them, if you like their project, their white paper or whatever. But the truth is, the number one best bet you can make is on yourself, because you control that more than any other thing you can control in this world. In this crazy world of chaos where we control nothing, the one thing that you can control is how much time and effort you put into something, how much you're willing to learn, how much you're willing to educate yourself, how far you're willing to take it. So in the end, I think the best investment is in yourself. So that being said, let's go ahead and dive into some of these charts right here and see what we got going on. So let's go ahead and we will start with crypto today. Still going to do traditional stocks and everything, even though we're not going to be open on Monday. So basically we'll have Tuesday, Wednesday, and then we'll be back for Wednesday night stream anyway. So here is our Bitcoin chart. Before we get started, I do want to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So the Bitcoin futures chart is going to be closed still, but it is important just to take a quick look at it, just for a little refresh. It's important to remember it did close at 42,875. So we want to look at that price, because often when it goes to reopen, spot markets will come back into line with that within a couple $100. So regardless of what happens over the next 24 hours, more likely than not, we will stay right around that 42,875 level. Maybe we move up $1,000, maybe we move down $1,000, but chances are we're probably right around that level. So, and currently, spot market is trading at 42,951. So we're about $75 above that, and that's including all the oscillations over the weekend. So, the actual futures chart, something of note is that we did lose the 200 exponential and simple, both below them, and the slopes are to the downside, and we have been unable to close above the 8 or 21. So all of the moving averages are pointing to the downside, which is not good. You're hearing a lot of people talk about a death cross lately. A lot of times you'll hear people talk about a golden cross. The only reason those things are so important, the moving averages and the death crosses and golden crosses, they don't necessarily mean a death cross equals a bear market or a golden cross equals a bull market, because sometimes they can fail. What they do mean, and the reason they're so important is that in order to go into a bear market, it's factual 100% of the time you have a death cross first. And in order to go into a bull market from a bear market, it's 100% of the time you have to have a golden cross. So that being said, we don't count them as being a 100% certainty when they do occur, but we know that once they do occur, the likelihood of going into a bear market after a death cross is much more likely, because it's the first step of necessity before the bear market occurs. So in my opinion, there's many different ways to determine a bear market or to determine a correction or whatever. So a lot of people will use, in traditional markets, 20% down from the top. Once a stock or crypto or whatever is 20% down from its peak, it's considered to be in a bear market, 20% correction. Crypto is very volatile, so that's not very valid, in my opinion, for crypto or really for stocks. I mean, it is, but, it's kind of an old school way of thinking, and it's very one-dimensional, in my opinion, because something could literally go up 50% in a day, and then it could go down 20%, and now it's all of a sudden in a bear market. It just doesn't work for me. Another way that people determine it is the relative price action to the 200 exponential or simple moving average, which is part of what my strategy is. But instead of just using relative, like if we're below the 200 exponential or simple, they say we're in a bear market. If we're above it, we're in a bull market. For me, I use the slope. So you see, obviously, when the 200 exponential or 200 simple, when the slope flips on both them, I consider that to be a bear market. When the slope flips back to the upside and they're both blue, I consider that to be a bull market. So as far as the futures chart is concerned, we are in a bear market on Bitcoin futures. We do have the hard buy coming out of the bearish control zone, but we see we just got that signal right here, immediately moved up to the 21 and then got rejected. So now the thing that we are paying attention to on this chart that I do like, the main bull case that I have right now, which is quickly fleeting. There's not very much bullishness I see in these markets. The main bullish argument I see right now is that we have this low right here at basically like 46,000, and now we have a lower low. So we have a low here, and then we have a lower low here. And then if we look at our indicator oscillator here on the TDMACD, we have a low here, and then we have a higher low right here. And then we see once again on the Jewel Thief, we have a low here, and then we do have a lower low right here. So we're getting divergence not on the Jewel Thief, but we're getting it on the TDMACD. So I like to see everything agreeing because it gives us a higher probability of success. But the fact that the MACD is giving us some bullish divergence gives us a little hope. Now, unfortunately, because we're not seeing that line up as well with the Jewel Thief, more likely than not, what I think will happen here, we'll probably get another drive lower. We will probably get a third drive lower, a new low since our all-time high, and then potentially a third drive of divergence, at which point in time we might get some divergence on the Jewel Thief on the daily, and then that would line up with the MACD, and then also price action, obviously, and then maybe we get a nice push up from there. Now, the reason that's so important is we see right here we got bearish divergence, only 2 drives, but that was right before our dump. So that perfectly identified the absolute top right here. And what that divergence is telling us is that the trend is unsustainable. We see here, we had 1, 2, 3 drives right here. And each one gave us a different bearish divergence. I'm sorry, bullish divergence rather. So we had basically our initial low through this area. And then we had a lower low through this area and a lower low through this area. And we see we have a big low right here and then a medium low right here and then a small low right here. So we had triple bullish divergence. Again, we saw 1 drive, 2 drives on the Jewel Thief and then not on the third one. So this basically identified, some bullish divergence here. And then finally we see at the top right here, the initial top, we had 3 drives of that bullish divergence or bearish divergence as well. 1, 2, 3 drives, 1, 2, 3 drives, and then that peaked. Now the futures chart was not as reliable as the spot market in that sense, but the moving averages have been much more reliable. So let's move on to our spot market and take a look, and we can kind of compare that. So we see here the 200 exponential has rolled over, but the 200 simple technically still has a blue slope. So we have avoided for now a bear market on the spot chart, which makes sense because typically the spot market is more bullish because it is people that love Bitcoin and trades over the weekend when half the participants aren't playing the game, as opposed to, obviously the futures chart, which is more institutional investors. They're just looking to make money. They don't really care about direction. They're not, crypto moon boys or anything. They literally just want to make money. So here we see once again, we have the low right here and a higher low right here. We have flipped the slope line over blue on the TJD TDMACD. So that is the beginning of the potential, but we do have to be careful of a signature like this. Oftentimes when it initially flips, we then sell back off. And then in this case, you'll see that same thing happen. We put in a low right here, and then we put in a lower low right here, and that was our divergence signal. And then we actually came down again, and that was our third drive of bullish divergence, followed by the uptrend that we were able to capitalize on. So while we're starting to build up momentum right here, and we're starting to put in some bullish divergence, we really want to be careful that there's not a third drive lower right here, and we lose this key level. So, right here, we're holding obviously a key level. We have a little bit of divergence on some of our indicators, but still very skeptical of this price action. And also, this is the first time we're legitimately threatening a bear market, since basically like 8,000. So it's kind of a big deal. And then obviously, if we look at the price action is a little bit clearer here. So just to see how reliable this bearish divergence is when it plays out, we see the 1 drive, 2 drives, 3 drives. Each peak is lower than the previous peak. And then here we see a peak, a higher peak, and a third higher peak. Here we see a peak right here, and then this one is actually lower, and then this one is lower again. So again, we see 3 drives of bearish divergence telling us this trend is unsustainable. And then we come and put in a lower high. And then once we put in that lower high, we basically confirm that we don't have enough momentum to move higher. We also took out that previous low. So that's the 2 things we're paying attention for. We put in a high, then we take out the previous low, then we put in a lower high, and then we take out that previous low right here. So we go from basically having a high, a low, a higher high, a higher low, a higher high, and then now we have a lower low, and then we have a lower high, and then we have a lower low. And that's basically the transition from, a bullish trend short term to a bearish trend short term. And that's when all the damage is done. That's what we're avoiding. And the same way here, we see obviously a much more reliable, signature on spot market. Here we have a low, here we have a higher low, here we have a third higher low. And then here on price action, we have a low through this area, we have a lower low through this area, and we have a third lower low through this area. So again, that's giving us triple bullish divergence, the same way we got triple bearish divergence. This is saying that the downtrend is unsustainable. Now we're going to pop to the upside. And then obviously we did. We see that same signature of bearish divergence right here. We have a very clear high. We have a very clear lower high. And once again, we have a very clear high. And we have a very clear lower high. And here on price action, we have a high and a very clear higher high. So we see like a double top bearish divergence here. And then again, we get a violent sell-off. So that's what we're paying attention to. So the divergence has been playing out very, very clearly. It's been working excellent, as basically a signature in line with our other indicators. So while we don't give it 100% weight, where we just see divergence and immediately just go all in, we never do that. But obviously we take it, we look at all our other factors, and then we factor that in with a weight accordingly to how reliable it is. And the more confidence we have between these different techniques, the more reliable they are to playing out. So while we're seeing currently some bullish divergence, I think it's very likely that we do actually get a third drive lower, at which point in time then we can reevaluate. And then at that point in time, if I'm correct, and if that is the case, when we do get another push down lower, when we take a position off of that for a scalp trade, it's going to be the reversion to the mean or retest of the 200 exponential and simple, at which point in time, we're going to start selling the rips. So we're going to basically have confirmed into a bear market at that point in time. And instead of buying the dips on the way up, we're going to be selling the rips on the way down. So That's what I'm seeing here on the longer term Bitcoin chart. We're not even longer term, the daily. And then when we look at the longer term Bitcoin chart, we can see now we've obviously went into deep, dive on divergence and why it's so important. So now here we have a high from April basically, and then we have our high that we just put in recently in November, and we see that the high from April is lower, the high from November is higher, and then we see on our indicator oscillators, first on the Jewel Thief we have a high back here, and then we have a lower high right here. And then on the TJD TDMACD, we have a high here. We have a much lower high here. And we see when we compare those points on the weekly, we have bearish divergence on the weekly. We also see the 8 and 21 have crossed to the downside. We see a bunch of red histograms, and we have lost the blue slope on the TJD TDMACD. And obviously we got the hard sell signal coming out of the bullish control zone in both cases on the Jewel Thief. So at this point in time, we're very close to entering the bearish control zone on the Jewel Thief. We're below the zero line. We have a red slope. We have everything basically telling us that we're looking at downside potential. Now we are still above the 200 exponential and simple on the weekly, but if we look back at the history of Bitcoin, Bitcoin has been in essentially like a perpetual uptrend since inception. So we don't expect necessarily to lose these levels. We did have this little snapback here in 2018, 2019 bottom where we lost the 200 exponential, but we were able to save the 200 simple. So if that is what happens in the bear markets, and again here in the CVD dump, it's not unrealistic to think that we're going to get, if we continue on this trajectory, that we're going to get a retest of the 200 exponential and then eventually at least touch the 200 simple. So at this point in time, if it just happened tomorrow, we're talking about a $25,000 price target. If we're talking about the 200 simple, we're talking about a $20,000 price target. So the longer we continue sideways or slowly go down or don't at least reclaim 50,000 plus, the more likely we are to go down to those levels. So I know people don't want to hear it. I know people want to talk about lengthening cycles, or they need one more 2x or 3x or 5x or 10x, or they're buying their place in the metaverse or in on the Citadel or whatever. They just invested in the NFT that's going to change the world. It is what it is. I mean, could we be wrong? Sure. Are we going to see it happening? Are we going to see it coming? We have plenty of time to change our view. Yes. Not just going to disappear all of a sudden if price action starts looking bullish and stop making videos. You don't have to worry about that. I will consistently be on here, walking you guys through my personal view on the markets and, essentially like using actual like statistics and consistent technical analysis to determine what moves I'm going to be making. So at this point in time, though, it is important to note that we were talking about trend. We took out the low right here. So we now have a high, and now we have a lower low on the weekly. We have the bearish divergence on the weekly, and basically everything is pointing down. So the initial level that I'm really watching is this previous low right here, which is basically the weekly close at like 31,600. That is the next area I expect support. So if we lose the level we're currently at, 31,650 is a key level. If we lose that level, we're talking about 25,000 or 20,000, and we're all but confirming, at that point in time, a 1 to 2 year bear market, and that the 4-year cycle is still intact, and we expect everything that has happened in the past to continue happening in the future. So let's just take a quick glance at the monthly here. Also, not much has changed on this. We do see, obviously, we lost the 8 moving average. So the next reasonable target would be the 21, which is 37,359. And we are putting in our second red histogram. We did get the hard sell coming out of this previous area. So not looking great, to tell you the truth, for crypto in general. So Ethereum, we've done some broad technical analysis on this chart quite a few times, but we obviously were in this uptrend inside of our yellow channel for quite some time. We now have broken through the bottom of that channel. We also had a smaller channel right here, a descending channel, and we broke through the bottom of that channel as well. Come back up, and we're trying to retest the 200 exponential and simple moving average. We're trying to get above the 21 moving average. We're currently at the 8 moving average, and we see here basically that all those levels line up. The 200 exponential, the 200 simple, and the bottom of the descending channel all come in right at about 34.55. So 3,455. We're currently at 3,324. So it's not far above our heads. about $1,000. So a retest to that level seems likely at this point in time. Hard buy coming out of the bearish control zone. Bunch of green histograms. Seems very viable that we would get a pushback up to that level. But again, if Bitcoin just starts selling off aggressively, Ethereum is probably going to take a hit as well. And then on the weekly, can we get a clearer picture here? Well, again, we have a peak right here at this high, and then we put in a higher high right here. And then we see from this peak right here to this peak right here, this is lower. And then again, if we look on the Jewel Thief, we have our peak from back here and a lower peak from here. So again, we're seeing weekly bearish divergence on Ethereum as well. So Ethereum, once again, pointing in that same direction, and the direction is down. We do have also the 8 and 21 preparing to cross. So that weekly cross here, looks all but inevitable at this point in time. Not unrealistic to think we could get a pushback up and attempt to save the trend at 3,621. So we have a couple areas to look at for Ethereum, but we have the hard sell signals coming out of the bullish control zone. We have all red histograms, and we now have our first red slope line on the TJD TDMACD since way back here in July of 2020. So right back here at $236, Ethereum crossed bullish based on my indicators, and Ethereum crossed bearish back here at roughly $3,935. So while you might not agree completely with what I'm doing here and my technical analysis, and you might have your own system or technicals or whatever, but the fact of the matter is that was a 1,541% move, and you never had to exit. All you had to do is just enter once and exit once, and you 15x'd. So it is what it is. There's a reason that I use these specific techniques over and over again, and they consistently work. And obviously, in this case on Ethereum, they worked extremely well. So while I don't think it's all over for Ethereum, but at this point in time, the risk is higher than it's ever been, for a big move to the downside. And if we get a similar type move where we start retesting these key levels, we're looking at like 1875 on Ethereum. The 200 exponential is 1432, and the 200 simple is about 1,000. So bear market targets around down in these levels. Again, probably going to take a year plus to get down there. Not something that's just going to happen overnight, but we are starting to threaten that those are potential targets once again. So ETH to Bitcoin ratio, not much to see here. We basically broke above our little resistance line, came back down, basically got the measure move break of our double top pattern here, broke down, came back up, trying to hold this level here. So technically Ethereum is holding for now, but I don't love how it looks, honestly. When we look at the total market cap, we see the same thing happening here. We see the 821 cross on the weekly. We see the bearish divergence on the weekly. Same exact thing we see on Bitcoin. Same exact thing we see on Ethereum. So again, telling us this trend is unsustainable. The key levels that we're paying attention to, we have already come down and tested the 1.9 trillion or like 2 trillion mark. So the next reasonable level would be the 1.28 trillion. So that is about a, $75 billion loss? No, I'm sorry. Man, I can't even get these numbers right. That is about a $750 billion loss in market cap. So quite the move. And then again, if we come back down in the bear market levels of like 970 billion or 720 billion, that is definitely a big threat to the market cap and probably will look like a bunch of altcoins going away permanently. So hey, what's going on, Big D? Good to see you there. Good evening to you as well. Glad you stopped by, my man. Honkiness, good to see you. Good evening. And Breaks 212 obviously said what's up to you. Appreciate the feedback. So let's keep on moving here. So crypto market cap telling us the same thing. So far we have basically Bitcoin, Ethereum, and the crypto total market cap all telling us that there's bearish divergence, unsustainable trend, and that we're probably topping out on a weekly time frame. And then our Bitcoin dominance chart, we're paying attention right here to the triple bullish divergence developing on the Bitcoin dominance chart. So we have basically a support in green and resistance in red, and we're basically down at that support. So assuming this holds right here and Bitcoin holds this level, it's likely that we get 1, 2, 3 drives of bullish divergence. We have a low here, a higher low here, and a third potential higher low here with 3 higher lows on the price action. So potential target to the upside about a 45%. So that would be either Bitcoin breaking out to the upside and having a violent move that the alts can't keep up with, or Bitcoin breaking down and alts having a violent move, that Bitcoin holds its value in comparison. But still range trading either way until one of these levels breaks. It is important to note that we are very much inside of the bearish control zone, and we're at pretty low levels here. So we're at like 8% right now, and obviously this tops out at 0 or bottoms out at 0. So there's not a lot of room to move to the downside on the weekly for Bitcoin to lose much more value in comparison to alts. So I think at best a bullish reset or a bearish reset and then continuation, or the bullish divergence plays out and we get a pop. Cosmos, yeah, we can take a look at Cosmos, man. So Link is next. So we basically had a little descending pattern on Link, broke out of that, had a nice little move to the upside, and we have reclaimed the 200 exponential and simple on the daily. We're just kind of hanging around right now. So we see a hard sell signal coming out of the bullish control zone, a bunch of red histograms. We do still have momentum in our favor. The best thing Link can do now, in my opinion, is just go sideways for a bit and basically just kind of reset, chill out, and hold these levels. So that is the best case scenario. In the event of a pullback, I would expect a pullback to $22.60. If we push up and put in a new high, like local high, I think it's realistic to think $31. So basically between $22.50-ish to $31 basically is the target. And we're essentially right smack in the middle of that range. But the best thing we can do is just hold the 200 exponential and simple right around 25. So and then Polkadot is next. So Polkadot has broken down below the 200 exponential and simple. It is holding that level for now, trying to cross the 821 back to the upside, putting in some momentum, a little bit of bullish divergence on the daily. Doesn't look particularly great. Really want to see Polkadot push back up above $30, potentially above like $31.40, at which point in time we can really start looking for some upside targets. But at this point in time, it's not necessarily beneficial for Polkadot to just go sideways. Link goes sideways, it starts looking better and better. Polkadot goes sideways, and it's really not the case. It really needs to get a push back up above $30. Uniswap next. We're still just filling out this giant descending triangle. This is an overall bearish triangle. Obviously, just kind of oscillating in this range, right smack in the middle of the triangle, building up a little bit of momentum, getting a hard buy signal. Looks possible, likely that we get a pushback up to like $21. But again, that's still trading inside the range. And then if we do get a breakdown, I would expect somewhere around like $14 to hold. So we're at $17.70 now. 21 target to the upside, 14 targets to the downside. And it looks like we're trying to build some momentum to the upside. We're not seeing any clear divergence or anything, but it looks like this thing wants to move up. Did have a nice little pop, overnight. Nice little like dollar or so. XRP still just looks terrible. We're seeing the hard buy coming out of the bearish control zone, but nothing is happening. Building up momentum, a little bit of bullish divergence, but we're barely hanging on to support. We're well below the 200 exponential and simple. Can't get above the 8 and 21, and we're barely hanging on to this blue support line. If we get a push to the upside, I think it's possible we get up to like 93, 94 cents. If we break through that, we come all the way back up to this resistance at like $1.12. But in my opinion, that would be a selling opportunity of a lifetime to just get the hell out of this trash coin. Because more likely than not, it's probably going to come back down here to key support at like 51 cents. So could move up and then down, could move down and then up. But the fact of the matter is the risk far outweighs the reward at this point in time. But again, seeing some slight bullish divergence, but just not really seeing the interest in XRP anymore. And if this ends up being the end of the bull run, you could blame it on the SEC. You could blame it on, Ripple Labs. You could blame it on whatever you want. But the fact of the matter is XRP has vastly underperformed the markets this cycle. Still has not put in a new high from 2017, 2018 bull run. Not good. This is the last thing you want to see. So Matic is next. Matic has reclaimed the 200 exponential and simple. Still just staying one of the strongest cryptos. We do have a little trade setup in play here. Looks okay so far. We're at about $2.41. Target to the upside at about $2.84. Building up some momentum. Overall, the interest and chart on Matic has been one of the better ones lately. So obviously, not only is like Polygon Matic actually like doing something, but also they have a lot of momentum and a lot of attention behind them. So as a lot of these other cryptos stagnate or go down, the ones that are popular, the ones that are performing are staying in the limelight, and Matic is one of those. So we have basic attention token next. So BAT is essentially broken down from its 200 exponential and simple, starting to look like the bear market is upon us for BAT. We did put in the high back here, and then we put in a low, lower high, and now here we have put in a lower low. We're below the 200 exponential and simple, trying to build up some momentum, but to tell you the truth, I think BAT's done. I really do. And this is really starting to look like a giant head and shoulders. We have basically like a left shoulder, head, neckline, like a series of right shoulders, and now here we are at the neckline. So if we break down from this level, I think it's very likely we retest, around like that 70 cent area. So definitely some serious downside potential here. If we rally back up and get back above like $1.20, reclaim the 200 exponential and simple moving averages, that could change the game. But in all reality, let me go ahead and delete all this. In all reality, at this point in time, I'm looking at something like this. We basically have a descending resistance, and we basically have, just a horizontal support, forming like that neckline of the head and shoulders. You could call it, there's a lot of different ways we could draw this, but I'm thinking something around like that. But in my opinion, just looks like a giant descending triangle. So typically, these are bearish 66% of the time. They typically break about 60 to 75% of the way through them. So we're at about that level now. So I would expect this to pop in one direction or the other. We're towards the bottom of the range now. I think more likely than not, it will break down, like statistically speaking. But the move to the upside would just, the retest of 200 exponential and simple would basically just be resistance at like 117, 118. And then support still at about $1. Nothing really to see here, in my opinion. So Cardano, depending how we want to draw this, there's a couple different ways we can kind of look at this. Let me clear up this chart a little bit. Yeah, let's just clear all this off. Do a little reset here. So what I'm looking at with Cardano basically right now is from our little peak right here to our low that we're at right now, assuming that is going to be our low, at least for now, we can basically just look at our internal fib retracements. So from the high to the low right here, we hit the 236. If the 236 level holds, which is right around where we're at right now, about like $1.38, I think more likely than not, we push back up to the 382, which is about $1.61. That's right around where the 200 exponential moving average is. 200 simple is at the 0.5 at about $1.82. And then the 618 is the most common retrace at about 206. I don't know that it gets there. It's been very weak lately. It's very clearly in a bear market. The 200 exponential and simple have rolled over. Doesn't look particularly great, but those would be my targets to the upside. Depending how you want to draw your resistance here, we basically have a high and then a lower high. So there's two ways that you can draw this. You can draw it from this high right here to this high right here, and then that lines up about with the 382 at $1.61. That seems like a decent possibility, likelihood, probability. The alternative way that we can draw it is that this was an outlier. This was a breakout of, the downtrend that failed and then rolled back over. So we're not going to count this little spike right here. We're going to rule this out as like a little anomaly or outlier. And then we're going to pay closer attention to what's going on here. So if we look at it like that, I'll change the color of this one. We'll turn this one to like a pinkish white color. Ooh, that's super, super light. So there, we'll turn it to like a little like kind of pinkish faded color. And we can look at a couple ways to draw this. So we have our high right here, and then we have this little area right here. So if we rule out those like little candles there, we have a pretty clear resistance here. And then that gives us essentially, an area that we're at right now. The alternative is that if we look at it as where this little wick hit right here, because that's our peak right there, this wick hit perfectly on it right here, this wick hit perfectly on it right here. We had this little area where we broke out, held that line of support, and then it failed. And then this wick hit on it again, this wick hit on it again, and now here, that's right where we're at now. So to me, this looks like the way that we draw it. We have the most confluence, the most touch points, and this is the most reliable area that we're seeing constant price action bounce off of. So if we can consolidate here long enough and go sideways, I think we likely move up to the 382 and then potentially the 0.5. If this area fails to hold, the 236 fails to hold, and the resistance, pushes us back down, I think we come back down and sweep the lows. Now, maybe we find some support around $1.20, turns into an inverted head and shoulders, then we get the breakout. Maybe we just go to a lower low, and this thing lets go. But the last thing we want to see on Cardano, I don't care because I took profits in Cardano a long time ago, and I think it's a total trash project. But you guys know that. You know how I feel about Charles and his empty promises. Basically, this support right here, $1, is do or die for Cardano. If Cardano breaks down below $1, it literally goes straight to zero. Straight to $0 and 0 cents. Well, not literally, but it goes on its way there. But it looks bad right now. Looks terrible. I would not want to be involved in this. We do have some bullish divergence. Obviously, that's playing out right now. But, any pumps we see in these altcoins right now, if we end up seeing continuation to the downside and the bearish trend flipping right here, these are liquidity grabs. What these big positions, what these whales do is they take their money, they move it into some random trash coin from like Bitcoin or whatever. They start to just put in consistent buys. They use like bots to push the price up slowly and buy and buy and buy. They break it out of a key level. Everybody FOMOs into it and sees the breakout, and there's a very clear level, and they're like, this is it. Cardano's breaking out. We're going back to the moon. It's headed back to $3, $5, $8, $10. All the influencers come out, and they're like, Cardano to $10, market cap, number 3 crypto, the flippening. And then what happens? As soon as it breaks out, the whales just use the buying volume that's coming in, and they just dump straight on their faces, and then this thing just capitulates to a new low. That is 100% what I think is happening. And if you don't believe me, that's exactly what this is right here. The whales break it out to a key level and then just dump. It completely engulfs the candle and then just melts down after that. The alternative would be it's already weak and the whale doesn't pump it up. He just straight sells it and it dumps down so much faster and he gets a much, much worse price for his selling or her selling or they selling. So the fact of the matter is, this to me looks like simple technical play from a market maker to just destroy FOMO, newbies. And we'll see it happen one after another on the cryptos. If the market just goes sideways and the big caps go sideways, I expect random shit coins to just pop off one after another and basically not be able to hold those levels. And that essentially is just whales switching into a shit coin, using it as a liquidity event to basically cash out. So sushi still looks very, very weak. We called the top perfectly on the 200 exponential and simple retest. Since then, this thing has just been melting down. The 821 crossed the downside. Bears are in control. And again, it looks like it's ready to roll over. If we come back down here to 650 again, I don't think it's going to hold. We're going to end up back down here at our lows. So I fully expect sushi at $5 very, very soon. Very, very soon. And that's another big move to the downside. And just keep in mind, these things can get cut in half and then get cut in half and then get cut in half. And they can just keep getting cut in half infinitely and still never go to zero. So Hathor, we put this setup in play for a potential move to the upside, but this does not look particularly good. We basically just have a slightly lower high right here. We are holding a higher low. So basically this thing is just kind of flagging out. Bears are clearly in control. No momentum to the upside. We're holding the 200 exponential and simple for now, so it does look better than a lot of cryptos. But to tell you the truth, it doesn't look particularly great. Does not look particularly great. Is the risk reward there? Realistically, it looks like it's probably going to come down to $1. That looks most likely at this point in time. A retest of $1. Alternatively, it could push back up and threaten the highs, but realistically, it has to get above $1.50 right now. So if we're talking about 25 cents to the upside or 25 cents to the downside, that's a coin toss to me. There's no reason to. I'm not into coin tosses. I don't like those odds. 50-50, leave that for the birds. Avax Avalanche. So even if you did enter into that position, by your own accord, because obviously it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please use your own research and trade responsibly. And I don't even know what attar is. But assuming that you are interested in that, for me, it's one of those situations where I'm just going to move my stop to break even, or I'm just going to exit and wait for a more favorable setup. Because when the things change, sometimes you got to change with them. The people that get stuck on a view or are convinced something's going up or down, those are the people that end up losing in the long run. You have to adjust to the market. If the market starts telling you something and you hear it and it's like, okay, I hear what you're saying, market. I hear you. I'm with you. I'm with you. And then the market starts telling you something different. You have to listen to the market again. You cannot just say, well, you told me this before, and now you're telling me this, and I like what you said before, so I'm just going to listen to that. It doesn't work like that. You have to just listen to what the market's saying, or else why even do TA, honestly. Avax Avalanche, basically just flagging out right here. It's definitely losing its hype. This one was real popular. Everybody was talking about it was the future and all this stuff. I told you guys this thing was way overpriced and had been way overpriced. I got into this much cheaper than this. Nothing has changed. There's just no reason to hold these things, in my opinion. We're below the 821. It looks very weak. Solana, same thing. We got into this at much lower prices. It's now threatening key levels of support, barely bouncing the 200 exponential and simple. It's basically just range trading right now. So until we see some kind of life out of this, I'm not really interested in it. We do see a little bit of bullish divergence developing, but again, I'm waiting for that third drive, and I'm waiting for something to happen in the actual market, because right now all that's happening is one random crypto is moving up like 5, 10, 15%, and then selling off and not holding those levels. So to me, that's not good. We want to see the breadth of the market positive. We want to see everything just grinding higher. We want to see everything putting in new highs or breaking out of key levels. We want to see momentum back to the upside. We want to see legitimate moves in crypto. We don't just want to see these quick little pops, and then if you didn't get into the pop, you end up just eating the drop. That's not cool. That's the last thing we want to see. It's the same thing we've been seeing in tech stocks over the last year. I called out Cathie Wood way back when everybody was praising her. They were swinging from her lady nuts. And what did I say? Talk to me in 1 year and we'll see how Cathie does. Because anybody can outperform or do something phenomenal by taking crazy risks or doing a great pick on something and being overweight in it for 1 year or 2 years. But to be consistent over time is what this game is all about. Because I'm going to tell you right now, if you've ever been to a casino and you made some stupid bet and you hit, on roulette, like, 36-1 or something like that, you're like, oh, I'm a genius. I just hit 36-1. I'm crushing it. Everybody, look at me. I'm perfect. I'm amazing. I'm great. But then what do you do for your next 50 bets after that? You never hit the right number again. I mean, statistically speaking. So the more reckless and concentrated you are with your bets, the more likely you are to look like a hero for a little bit. The more consistent you are and the more technical you are and intelligent you are with your investments or trades, the more likely you are to succeed over time. But I'm going to tell you right now, most of those people that win on that one big bet or that one big hand or that one big, investment, most of those people end up losing it over time because it goes to their heads. And it's the same type of situation we were talking about earlier, where you start off with $1,000 in the market and then you put 5,000 in and then it starts to dump and you bought way higher with the 5,000. So now you end up negative. That's exactly how Cathie's fund was. I mean, the fund was worth, her ARK funds were worth tens and hundreds of millions of dollars on the way up. And then they had massive amounts of inflows and became worth, $50 billion based on inflows, not based on price appreciation, because they were basically just going sideways at that point. And then now we see, they're selling off down to the double digit billions, 20 billion, 10 billion. Soon it will be 9 billion, and think about all the people that rode it on the way up made millions, but all the people that rode it on the way down lost billions. So in the end, the net loss of the people that end up in a position like that is much, much, much greater than the early adopters that are saying, I'm up 500%. Cathie Wood's a genius. Got to know when to cut those, got to know when to cut and run and when somebody is just a fad. And it's very obvious, Cathie has moved down to Florida now. She's basically just retiring. She's just going to, keep coming on and telling you, hey, 5-year time horizon, invest in me, buy the dip, keep investing in me. She's making her percentage off those billions of dollars. She's already very, very wealthy off all the suckers that came in, on her back. And, you know, the truth is, it doesn't matter for her anymore. She's making her cut. She got rich. Everybody else got poor. So if that's the type of person you want to get behind, by all means. I respect her hustle, though. I respect her hustle. You know, she did it legitimately for the most part. You know, obviously she does have some ties with Archegos, which is a little sketchy. A little bit of that Wang. A little bit of that Wang gang. But, you know, at least she didn't Elizabeth Holmes it and straight up, like, you know, lie to people and, like, forge documents to make her billions. But it is what it is, you know. Got to respect both their hustles. One of them was at least kind of honest about it. I think, honestly, Elizabeth Holmes is a straight up liar and thought maybe one day she could be right, but figured she could lie her way to success. You know, and that's Silicon Valley way. I'm not blaming her, but it's different when you're in the medical field. And then Kathy, I honestly think Kathy believed all the bullshit that she was spitting. So I at least respect her hustle because I think she was honest with it. She was at least honest with the people of what she believed. I think the lack was in her being honest with herself. So EV market is not going to take over the world anytime soon. Oil is not going to go away anytime soon. All these trash bag companies that you're like, oh, if they were good at this price, they got to be even better, down 75%. Well, if they're such good companies and you knew anything about technical analysis or trading, why don't you just wait for them to go down 75%? But it is what it is. It doesn't make sense to me for someone to have a 5-year time horizon and day trade. It does not make sense to me. If I had a 5-year time horizon, I would be buying things and not touching them for 5 years. I would not be buying them and then selling them, you know, a week later at a loss. But it is what it is. So let's keep on moving here. Oh, what did you ask for? What crypto did he ask for? I don't see it. Oh, Cosmos? Yeah, yeah, I'll do Cosmos. Any other cryptos while I'm at it, guys? Let me know. What is Cosmos? Is that Atom? Is it, or no, it's not, is it? Oh yeah, it is. Okay. So yeah, we're at retesting the highs right here. So we basically have, you know, 4 tries at this same high, right at like 42.58. Looks, I mean, it's still on top of 200 exponential and simple. So overall, looks pretty strong. Looks like it's about to get the buy signal from the neutral zone. Momentum in its favor with the slope line to the upside. We're seeing a couple green histograms. Definitely trying to eat through some serious resistance right here. So, you know, basically we're at resistance. So you guys know how I feel. I buy support, I sell resistance. So we look like we're at the area now where everybody would be selling into it, or there's massive sell orders on the books. So in my opinion, this is where we take profits. Now, is it possible it breaks out and continues to the upside? It is 100% possible. And the more times we hit that level, the more likely it is to break. But right now, it looks like we're essentially getting squeezed into like a little something like this. So we basically have this strong ascending support line that's coming up here. And that is basically what we need to hold to move to the upside. And then we have this strong, even more strong, you know, resistance line that is what we need to break to move to the upside. So we're basically pinched in between these two areas. The more likely thing to happen, in my opinion, is we break down from this level. But if we break out, you know, this thing could really run. And the best way, in my opinion, to determine a target on this is we'll just take the all-time high and then we'll take the pullback down here, which is like about 20 bucks. And then we'll just draw a Fibonacci retracement. So we go from the high to the low right here. And then what that gives us is a Fibonacci extension target to the upside. And then we can look at where those targets would be. The 1.236 would be around $53. The 1 point, I don't really use the 1.382, but you can if you want. 1.5 is about 66.50, and then my key level is the 1.618. That would be about $72.80. So it'll be a nice profitable move to the upside. So arguably, you could enter into some kind of trade right here off of like the 886 or off of like this key, resistance, something like that, with a target of at least the 1.236. You could buy the breakout if you wanted to. I do not like doing breakout trades, but even that is a 10% stop loss at like 37.25, and it's a target of 53.46. So it's like 28.7% to the upside or 10% to the downside. So essentially, almost 3 to 1, 2.7 to 1. And then assuming we got actually like, a more bullish move than that, let's say we got up to the 1.618, which was realistically our actual target for a breakout. And a blue sky breakout, it's not unrealistic to think that would happen. That would give us a 75% move to the upside, a target of $72.80, with that same 10.33% stop loss for a 7.3 to 1 risk reward ratio. So we flip the coin. If it's heads, you make, between 30 and 70%. If it's tails, you lose 10%. So is that a favorable coin toss? Yeah, I think so. I mean, it's a nice coin toss. But it's risky. Is it a 50% probability of success? Probably, honestly. I mean, it has a lot of momentum in its favor. So I think the real thing to do is when it comes back down here and we see, does it build support right here or does it break down? Because if it breaks down, you don't want to enter in it. If it looks like it's building support and going sideways, it probably breaks up. But if we lose this blue support line, it's not going to look good. I mean, it's realistically, then we would just look at a fib from the bottom to the top. And I'll turn that one green. And then I would basically just look at those same levels, which are basically going to line up pretty closely, just because that top back here was so close to the top we have right here. But essentially, the 236 retracement takes us back down to like the stop loss area. So that's the danger zone. We obviously don't want to get stopped out and then it moves up. But the 382 retracement would give us a new low, which would be 33. The 0.5 would give us a low of 29. And the 618 would be the most likely target back to the downside, which would be like 2760. Also lines up with 200 exponential and simple. So for me, and then obviously we're seeing potential for bearish divergence. So for me, I don't think this is a good time to be in it. For me, I like to take profits at resistance and buy at support. We'd see how it plays out though. It's there if you want it. And since you requested it, I'm going to give you the scenario both ways, and it's up to you to make your decision, obviously. So MicroStrategy still looks terrible. Obviously broke down, hit our first target of 470 almost perfectly. It's well on its way to the downside. Obviously the key level to pay attention to is 412. If we lose 412, which was the low from back here, this thing goes to like 341. So, and obviously the MicroStrategy Michael Saylor case is looking worse and worse by the minute. Obviously we're still at 43,000 right now. We know Michael Saylor's Bitcoin entry price after he's been averaging up for 18 months is like 31K. So now all of a sudden he doesn't look like a genius because his 31K Bitcoin is worth 43K right now. But the truth is he has enough of it that if he tried to sell right now, he probably would barely even end up in profit because there's just not that much liquidity around. So we'll see what happens. If we come back down and start to retest that 30K level, it's going to start looking real scary for those people that have big amounts of money in crypto. But we are definitely losing momentum. His stock is looking like straight up trash at this point in time. So, if his stock looks like this, and Bitcoin starts to look like it's in danger. His stock's down 62%. Starts looking real sketchy here real quick, and then people start wondering, oh man, what was I thinking? I bought into the FOMO, etc. So Robinhood still on the fast track to zero at $15. Looks like it's just going to go much lower. I think we had looked at the 2.618 as a potential new target. I mean, we can't even really use these targets because they're just so low. I mean, the 2.236 is at, we already cleared the 1.618. That was terrible. The 2.236 is at $10.36. 2.618 is at $7.29. The truth is, if Robinhood keeps selling off, I mean, there's definitely some bullish divergence. if it keeps selling off, somebody probably just buys it. Somebody probably just buys it. They have horrible like reputation, but arguably a good business. They made a terrible decision, and honestly, I think Vlad should step down as CEO for everything that happened. Cutting off trading and the decisions that they made cost this company. Because imagine everything was different. Imagine they never cut off trading and everything just resumed how it was, or Vlad came out and told the truth and said, hey, look, we don't have enough capital to continue doing this because they're asking us for more capital, so we need to raise money, or what, if he handled it as a responsible CEO or businessman should have, and actually like was honest and wasn't like a lying scumbag, this company would probably still be worth exponentially more money. So the fact of the matter is, somebody probably acquires Robinhood in the next 6 months to 2 years, in my opinion. That's my honest opinion. So Coinbase breaking down from key support, retesting these key levels. We did see a very bullish hammer candle come in right here, but it just took us back up to retest the breakdown level, and then we got rejected. So more likely than not, it looks like we're coming back down here to the lows. So I expect 207, 206, somewhere around there. And if that area doesn't hold, it's going to go much lower. We do see some bullish divergence, but the truth is there's a lot of bullish divergence on a lot of things right now. And there's a lot of bearish reasons that the bullish divergence is not playing out. So bullish divergence much stronger in an uptrend after a pullback, and then the bullish divergence shows up. Bearish divergence is much stronger in a downtrend after the dead cat bounce to the upside, and then a powerful move to the downside. So even when you have divergence, it's much stronger when it's with the trend. So you have an uptrend, but you have a small correction, and then you see bullish divergence. That's the best bullish divergence. When you have a downtrend, and then you have a correction back to the upside, and then you see bearish divergence, that's the most powerful bearish divergence. But that's not what we're seeing here. We're seeing the opposite. We're seeing a strong downtrend, and then we have a bullish pop to the upside for a lower high, and now we're resuming the downtrend. So the likelihood of bullish divergence playing out in a downtrend is much weaker than if this was, say, bearish divergence playing out up here, or if this was an uptrend and we were getting bullish divergence. So Coinbase still trash, company still trash, in case there was any question. Bed Bath & Beyond, this thing is still dead to me. There's no reason to play with this or anything, in my opinion. If we see another pop setting up here, maybe like a $20 play to the upside, but at this point in time, taking these risky plays on like trash companies is not a good idea, in my opinion. They just shut down like 38 stores or something like that. They're going out of business. Somebody's just going to buy them. It's same thing. All these things are going to go away. So we were talking about AMC. Obviously, AMC broke that key support. Looks like total trash. Again, going straight to zero. We see obviously that, CEO was dumping on everybody's faces. And then he's like, oh, that was all predetermined sells. And I'm with you guys now. Now I'm with you after I dumped, hundreds of millions of dollars in your faces and took advantage of this. Now I'm with you. I got your back now after I just betrayed you. Okay? And if you believe that one, I'll tell you another one after that, because you're dumb. And that's his words, not mine, because I love AMC. I'm a strong believer in AMC in the 90s. In like the actual movies, not the stock. Just like I went to AMC movies and bought popcorn and watched movies, and it was fun. That's how I'm with AMC. But the actual stock, the investment, the CEO, the company, the squeeze, the apes, no. Sorry. They're all dead. They're dead to me. You're dead to me. GME, Game Stonkaroonie, broke down from key levels nearly to our target. There's basically, this has at least got a little support left holding it up. So we have this key level at about 101 and a nice round number. We have another level potentially at about 67, and then after that, 38. I don't necessarily think it's going there like quickly, but it looks terrible. And the truth is, at some point in time, we get to a level where too many people are just upside down in this. The real volume came in above where we're at now, and so much trading took place above where we're at right now. I have to believe at this point in time that more people are net down on AMC and GME than are up. So if more people are down, there's more selling pressure likely than buying pressure. And we've obviously flipped into a bear market. We're below 200 exponential, below 200 simple, and this is accelerating to the downside. So this is what we call a bloody waterfall. You know, we're basically accelerating to the downside. We have a dead cat bounce, and then we're accelerating to the downside. So the most likely thing that happens is we just end up getting a gigantic red candle sometime in the near future and full on capitulation. But that's just based on facts and statistics. Maybe it just short squeezes and goes to the moon, but I doubt it. DraftKings, again, just completely melting down, just completely getting wrecked. Very much got almost no bounce at all at our initial target here. Nothing happened at that level. You know, we basically are headed down to our bottom level. And this is essentially like the last key level we're paying attention to, which is like 1833. If we break down from that level, we're talking about like $11. I mean, barely double digits. DraftKings, again, total trash. Was calling it out the whole time. I talked about how this was basically just a little short squeeze. Remember, Kathy Wood called the bottom on DraftKings right here at $44. And it's at 23 now. So just another one of her stocks that's cut in half. Queen Kathy. That is queen-like behavior, though, to basically take all the money from the peasants. So I guess really, technically, Queen Kathy is a good name for her. So let me jump in the comments, and then we will keep on moving. Don't forget Cosmos. Check. Crypto Deli says, what moving average indicator is that you are using? That is the moving average indicator. Like the one on my like main screen is the TJD Master. And that's the one that I determine trend with. And obviously there's a video on exactly how I use that. That one is exclusive to the group members, but is awesome and well worth it. And again, that's just something I developed basically that encompasses my trading strategy for determining trend. And it's something I just offer to the group members for showing their support, because the truth is, you know, I probably wouldn't be doing this if it wasn't for the group and, you know, them showing support, because I dedicate a lot of time and effort into making these indicators and doing these streams to try to educate people. And, you know, obviously the reward to effort that I put into these streams and everything is, let's just put it this way. I could easily spend my time somewhere else and it'd be exponentially more beneficial to me as a human being. But you know, I do enjoy the streams. I enjoy the community. I enjoy actually teaching people how to do things and hopefully helping them to become profitable. But that's basically something I offer them. Now, I recently created the Jewel indicator. I have the previous Jewel, but this is the Jewel Thief reimagined, like the newest version of it. That one also is now offered to the group members as well. And then the TJD, TDMACD, and all the other indicators are published and completely free. There's some old versions of some moving average indicators as well. You can go get any of them from in the description. Also, I keep like a chart up there. There's a lot of free resources that you can use. But as a sort of thank you to the group, I basically give them some, you know, benefits in addition to like the Discord initial interactions and everything. Now, it used to be a monthly, you know, basically like recurring fee to be in the group. It was like a one-time entry and then recurring. But in order to open it up more to the community and, you know, basically as a thank you as we grow and, you know, build it up a little bit, I switched it over to just one time. So it's, in my opinion, much more beneficial because I understand a lot of people are not full-time traders or investors. So they might be, you know, a little busy for a couple weeks or something and not get to fully utilize it. And I feel bad having people, you know, basically still make contributions if they're not getting their, like, you know, time or learning in. So I'd switch it to just a one time. I think it's much more beneficial for people. And the truth is, you know, it's more of like a thank you from the community than it is like something that I need from you guys. I mean, I'm not saying, you know, it's not nice to have people obviously like fund your work, but the truth is I don't really need it. So anyway, let's keep on moving here. Yeah, and the TJD TD MACD is the bottom one. And that is just, it's basically the trader's dynamic MACD. And I have like some settings that I have like mastered on there to, again, to determine trend. And the benefit of using these three indicators together is that that's literally my trading plan and how I use to do everything from long-term investing to like straight up scalping. So, and I do have videos on all the different indicators, how they work, what they offer, how to use them, why they're important, the breakdown of each individual component on them. So if you go to the actual video, playlists, you can find all the different breakdowns of each of the indicators. Some are old and probably could use like a refresh, but they at least explain how to do them and everything. So you can kind of get familiar with them. And obviously, if anybody is interested in the group, you can obviously reach out to me as well. So let's see. Yes, Adam. Litecoin. You want to see Litecoin? Can pull up Litecoin. Litecoin on Coinbase, USD. Been a while since I looked at the old Litecoin. EMA indicator, EMA custom, purchase required. Thanks, breaks. Big D says, muchos gracias, my friend. Break says Crow on Coinbase. We got some bots in the house. The old thotty bodies back at it again. Starting to wonder what's going on. I think we went a whole stream without any bots showing up. A whole entire stream, no bots. Blew my mind. I think they were all doing like a Michael Saylor, Anthony Pompliano stream, or scam, I should say. Let's take a look at Litecoin real quick. Yeah, not looking good. Litecoin looks absolutely terrible. I want to say that, man, what did we get in Litecoin? It was like $19 or something like that. Yeah. Oh, look, that played out pretty nicely. So Litecoin looks like, it topped out here, came down, put in a very clear lower high. So when Bitcoin made its higher high right here, Litecoin put in a lower high. That is obviously not good. It's at basically key support right here. Very much threatening a bear market. Yeah, man, this thing looks rough, dude. Let's see what the fib is. We'll go from the top to the bottom and see what kind of levels we're at here so we can get an idea of what we're working with. So we reclaim the 236. The 382 lines up perfectly with 200 exponential and simple. So if it moves to the upside, a target would be like 175. But again, I would expect that to fail. And if it breaks back down to the downside, your support's at 103. So you basically have like a 25%, $25 potential move to the upside, and you have like a $50 move to the downside. So this thing looks rough. Now it is building some bullish divergence on the daily. It is building a little bit of momentum on the daily. So if it consolidates here long enough, it probably does move up to 175. But again, I would be looking at that as like a liquidity exit pump. But if it reclaims, above 176 and holds for a while, maybe it starts moving back up. But we're still long away from that. So yeah, it does not look good. And Litecoin's one of those old coins that is basically just like not cool anymore and probably never will be again. Charlie Lee basically like burned that bridge permanently. So and what was the other one? Crow on Coinbase. God, I love this chair, but I have like the best chair in the entire world, in my opinion, but it squeaks sometimes, which is so annoying. So Crow on Coinbase, man, this thing looks terrible. There's probably a better chart that we could look at. But this looks absolutely horrendous. We basically are. We could just go from the bottom right here. Again, there's probably a better chart we could look at because this doesn't have a lot of history. But, just kind of looking at, this is trading pretty technically. Just from the bottom to the top right here, we have clear support at the 236. Then we have clear support at the 0.5, which then acted as resistance when we broke down from it. We basically tagged the 618 already. I mean, realistically, I think the target is a 786 at this point in time to the downside, which is like 34 cents roughly. The target back to the upside is the 382 at like 59 cents. But there's a lot of pressure, and it's just putting in lower highs and lower lows. We could probably do like a parallel channel type deal like this and get a better picture as well. Something like this. Depending on what time frame we were looking at. I think on the daily, if we just kind of move this around slightly, I think that's pretty much what we're looking at right there. Switch this to orange. Or actually, you know what? I'll just make this a little lighter. Hopefully you guys can see that clearly. Just turn that white. So basically we have a high, then we have a lower high. We have, you know, obviously our low right here, and now here we put in a lower low. So that is clearly a downtrend. I mean, obviously we're at 618, which would be a key level of support we would expect to hold. If that doesn't hold, we got to look at the 786, which lines up perfectly with the bottom of the channel. So in my opinion, you know, just staying inside the channel and continuing to do what we've been doing takes us down to our downside target. In order to get any higher basically than the 0.5, like 50 cents, we have to break out of the channel. So if we broke from the channel, the measured move would be from the bottom of the channel to the top of the channel, which would give us essentially a retest back up like to this basically high right here. So those are the key areas to look at if we broke to the upside. Now, to tell you the truth, that doesn't seem very likely to happen to me, like at all. It seems very, very unlikely that this would break to the upside because it has no momentum and it's basically just getting murdered. So it's never good when something's only been on the exchange for a few months and it's been selling off like a lot longer than it's been going up, because most people FOMO in after a big move happens and then it just keeps melting down. So it's not going to attract new buyers in, you know, unless it like has some like great white paper or something, or like Kim Kardashian endorses it. No offense to anybody that, you know, follows Kim Kardashian and takes financial advice from her, but probably don't take financial advice from people that are known for sex tapes and having gigantic fake asses. Like, just in general, as like a general blanket statement, like if you're gonna take financial advice from someone, find like an old man or woman with like experience in the field that's like not attractive and has like credentials. But also, you know, Snapchat and TikTok are fun, and Kim Kardashian is pretty famous and has a lot of followers. So maybe go that route. But let's be real, it's probably not going to go well. Probably not going to go well for you. Celebrity financial advice never seems to work out. You know, Floyd Mayweather, probably not the best guy to take advice from. Kim Kardashian, famous football players, you know, not to call anybody out. Tom Brady, like, are you good at football? Yes, you're great. Are you good at giving people financial advice? Probably not. I mean, let's look at it this way, okay? Imagine you're like in high school and you have like a really attractive, like super popular, like female, or like, you know, the quarterback of the football team. Like, imagine those people. Everybody had one at their school, unless you were homeschooled. Then you maybe were like the key athlete. Or maybe you were in a public school or a private school or whatever, and you were that guy or girl. But just think about that person, picture them, and then just think about, is that the person that you would go to for financial advice? Or would you maybe like ask like your economics or like finance teacher or something like that? For me personally, I would think like the lead cheerleader or the captain of the football team or something like that. Probably not who I'm going to ask about like financial decisions. So, but I mean, you guys aren't dumb, but obviously millions and millions of other people are really stupid and fell for that. So Ethereum Max, how about Max Payne? So yeah, let's keep on rolling here. So Coinbase, got it, check. Honkiness says, just sent you some Bitcoin. Hey, appreciate you, brother. Thanks, man. And then Breaks says, thank you. Thank you, my friend. Appreciate you guys tuning in today. Make sure you like and subscribe. Share it with your friends. Make your dog sit next to you on the couch while you watch my technical analysis. So what should we do next? Let's see. Well, we already got it right here. So let's take a look at gold. Gold still doing absolutely nothing. It's so funny. This whole entire consolidation period, every time gold moves up, people get so bullish. Every time gold moves down, people get so bearish. But literally nothing has happened. It's just flagging out. There's nothing going on. We have had this pattern in play for so long. We have two key supports in blue and green right here. We have a key resistance in pink, and then the old one in purple. So we're still just literally in the middle of the range, oscillating between Fibonacci levels. So in my opinion, there's nothing to see here. So the max gold is going to go to without breaking out is like 1850. The minimum gold is going to go to without breaking down is like 1760. So we have like, a $90 range on gold, and it's literally just been doing nothing. So just going to keep getting tighter and tighter and tighter and tighter and tighter. If inflation takes over and people actually get scared, maybe it breaks out to the upside. If, the inflation starts to subside and it turns out the economy is not in great condition and the world overall is not doing so hot, despite what, the talking heads tell you, we probably break down. So who knows? Maybe there's some big event and all of a sudden gold goes to the moon. Maybe an asteroid of gold, hits the earth and gold goes to zero. Either one possible. Likely? I wouldn't say so. But nothing really going on here. It is good that we reclaim the 200 exponential moving average. That is good. Silver looks absolutely terrible. Still just absolutely terrible. $22.80. Barely hanging on to support. We have this very clear support line in yellow. Very clear resistance line here in yellow. And then we have some key Fibonacci levels along the way. We're hanging on to support barely. We threatened it once, broke down from it, and it looked like lights out. Threatened it again, broke down from it again, and it looked like lights out again. And now we're getting less of a move back to the upside. Very clearly in a bear market. Very clearly got rejected at the 200 exponential and the 200 simple. Also the heart line of the channel. Silver really looks like it's going to break down from here. Key levels to watch. If it breaks below 2150, it's going to look real bad because that's like taking out all these previous wicks. But there's no support along the way right there. So in all reality, it's, silver's going to look like it's going to the teens. I love silver. I have silver. I'm not being mean to your silver. I don't dislike primates, but the truth is the truth. So I know I'm like mean to all the apes and the gorillas and the silverbacks and like the orangutans and the monkeys and the lemurs. I know I'm mean to you guys, but you know what? It's not my choice. You guys picked terrible assets to invest in. If you were just scalping them or just trading them, we were super excited. We crushed it on silver. We did well on miners. We did great. But you got to know when to just get the hell out. The whole idea of diamond hands hodling is like this. It's like a total trick. It's a total trick. Like if I was going to sell somebody something and then it just went down. If I was like Kathy Wood and I was like, yeah, diamond hands, hodl my ARK. Like so that I can continue to just get management fees from you. Because if you pull your money out, you have to stop paying me fees. But I don't care if you lose money regardless. I don't know. Her last recent interview, she was like, I'm all in. I'm all in. I'm right there with you guys. Diamond hands. I'm like, what did you say, Kathy? Did you say you're all in? For me, that's a giant red flag. When someone says, I'm all in, that to me is the biggest red flag ever. I'm like, you're all in with what? What do you mean you're all in? That doesn't sound like an intelligent person investing. That sounds like a last chance. Sounds like the last thing someone says before they lose all their money at the casino. I'm all in on this hand. I'm like, well, how you been doing lately? Not good, man. That's why I'm all in. Well, maybe that's not a good strategy. Gold-silver ratio, flipping the 200 exponential back to the upside. Still below the 200 simple. We did test it. Looks good. I think this is going to continue to the upside. I still think that the measure move plays out and we get somewhere up around like the 90 silvers equals 1 gold ratio. XPT still looks terrible. Platinum very clearly in a bear market. Looks absolutely horrendous. And it's one of the few metals that, to me, does not have a strong case, like, fundamentally either. So, at this time. That could easily change in the future, but it doesn't look good at this time. Copper still oscillating inside of our range. A little tightening range. A lot of tough stuff going on with copper right now. China has massive demand like worldwide for copper and their demand is way down. for like copper imports. China is going through a real tough time right now. So if they're all of a sudden demolishing all these buildings, you know, they don't need the copper pipes. They don't need the copper wires. They don't need the copper for random infrastructure. You know, this EV play thing is not working out the same way people were hoping for it. In my opinion, copper is great into the future, but the real copper play is India and Africa. Okay, if India and Africa start building up massive amounts of infrastructure and start moving up like in the world and, you know, catching up, whatever you want to call it, that's the real copper play, because they're going to need massive amounts of copper into the future. I am a huge believer in copper for sure, long term, but it already had a massive run. So not a good time, in my opinion, to be investing in copper. But if you're just going to Cathy Wood it and you got a long-term time horizon and you just want to put your money away, you don't care if it goes down 75%. If it eventually goes up, that's fine. I would be confident saying copper is going to be much higher than it's at right now 20 years from now. 20 years from now. But it goes probably much lower in the meantime. Lithium, barely hanging on to support here at 200 exponential and simple. Hit our target. This looks like it's going to go lower. It's holding on for now. We see a little bit of bullish divergence. Could it put in a new high? Maybe it hits. It's so close to hitting our target. The 1.618 literally fell like a couple dollars short. So does it go back up there, put in a new high? Does it turn into a head and shoulders? Tough to tell right now. Tough to tell. Same thing though. There's a lot of like geopolitical issues right now, especially with a lot of these things, like lithium, like copper, you know, cobalt. There's a lot of like China tension going on, a lot of Russia tension going on, a lot of just tension in general going on. Like everybody just needs, you know, a hot tub, shoulder rub, you know, and pick your poison. You know, a beer, a joint, a Xanax. I don't know what you're into, but the whole world just needs a double dose of that. So we need to just calm down. Everybody just needs to relax a little bit. We don't need any new world wars. Okay, this little V has been weighing on everybody pretty hard. Been pretty rough couple years here. Okay, I don't care who you are. It's been at least annoying. So I think we just all need to just kind of take it down a notch. We just need the soothing sounds of, you know, whatever, and, you know, just relax. But I have a feeling 2022 is probably going to be the opposite of that. Probably just going to be like high strung, super intensity, and just one thing after another. Hydrogen, HYDR, breaking down new lows as expected. I fully expect this to just completely melt down. Again, love the hydrogen play long term, but not now. Lumber up here threatening the highs back in those areas. This, in my opinion, this is fully speculative. We'll have to see what happens. Is it going to be an ABC correction and go much lower? Is it going to go to new highs? I have no idea. This is fully future speculative driven. I do not think this is any way, shape, or form like actual real demand. I really don't. USAS melting down. These metals just look terrible right now. Pot stocks had like a little pop right here. You know, Tilray had a nice little earnings thing, rebranded themselves. You know, literally Tilray brands. You know, I love these pot stocks long term. I've been dabbling in them, but the truth is they could easily go lower. They're not showing any true signs of like bottoming on long term time frames. When they do, by all means, the upside potential will be massive. But there's just no real signs of them bottoming right now. ACB, trying to hold on right here. Looks slightly better. It's not putting in new lows, but I mean, it could very easily be very soon. Full disclosure, I do have some positions in these various pot stocks as well. I'm actually like bullish on them long term. And I think, I mean, considering that everything else in existence has gone up for like the last like 2 to 5 years, and pot stocks like topped out in like 2018 and have literally just been melting down, one could argue that there's some value there. CGC, same thing, just continuing to put in new lows. URA, you know, these uranium stocks, again, same thing, man. These were great when we were talking about them in the beginning. I really think they're going lower here. I don't see the strength that you want to see out of them. You know, this whole like uranium short squeeze, there's not enough. There's a deficit of uranium mined to uranium used. China's building all these nuclear power plants. The whole world's building nuclear power. Sure, but they also take like 10 years. So I don't think we're going to like deplete the uranium supply tomorrow and there's just going to be like a massive spike to the upside. So these are super speculative plays, and most of them have played out beautifully, and they're barely sitting on moving averages. I think most of these things are going much lower. They all look the same too. Cameco, URA, UEC. Caterpillar had a unexpected spike to the upside. Powerful move to the upside here. Does look strong. Bullish control zone. Bunch of momentum. Reclaim the 200 exponential and simple. Looks like it's going to try to come up here to the previous highs. Could it easily just top out here and sell off? Sure. But, I mean, it looks like it wants to come back up to like 245. So, I will, I mean, I got to admit, I was wrong about this one. I really thought this was going to be going down here. So, it looks like I'm going to be wrong on this, and it's going to come back up and threaten the highs. And then, obviously, Deere, same thing. Looked like it was going to break down a couple times. Clearly was trading within the range. Broke out. As long as this area holds, you know, it's got a couple of key resistances on the way up here, but, you know, it very likely takes out like 400 if it just keeps grinding up here. Oh, that was a random Litecoin chart. AM. So obviously, like these infrastructure like plays are like strengthening for sure. This one is threatening the previous top right here. So we still have the high right here. Looks strong. Gaining momentum. Bullish control zone. Looks like it wants to rip. Cemex still in full effect. Still's got a little way to go to retest that 200 simple. Much less bullish, but I still think it gets to that $7.40 target. It's grinding its way through the 200 exponential as we speak. Ford, I mean, just straight up grinding higher. I mean, this is just absolutely crazy. Again, I'm fully in it to win it with Ford. Up another 25%. This thing is just crazy. This thing is just wild. Oh my gosh. Yeah, up another 25% since the rebalance. That's wild. I mean, I guess it's just going to keep ripping forever. I don't even know what to say at this point in time. GM, again, looks very strong. Not nearly as strong as Ford, but looks very strong in comparison to the majority of the market. Hasbro finally got the breakout over $1, or 100 rather. Trying to hold it as support. I mean, this thing is just, if this holds this time, I could start to get bullish on it. If it does the same thing it's done every other time and just breaks back down, probably goes to $90. We'll see. I mean, there's definitely some bearish divergence developing on this. It looks real toppy to me. Works looks like it's trying to carve out a bottom right here, picking up momentum. It could be time for this trade setup on Works, like a 50-cent move to the upside, which is like 40%. It might be time. I thought we had a trade setup on this. I didn't actually take it yet, but I thought we had a setup in play. Maybe that was in the group. So Sphere basically is down here hitting our target now. So this is the area we've been waiting for. We took profits back here after a massive move to the upside. We're all the way back down at our target area now. So this is it. This is what we wanted. So we basically have the inverted head and shoulders, the descending resistance line, the channel moving to the upside. We're at the bottom of the channel. We're at the resistance. We're basically at everything. We're at the 236 Fibonacci. I mean, there's some serious potential on this thing. So I guess target to upside is like $10. Target after that is like $28. But just keep in mind, this thing has been getting wrecked for years, since like 2014. It's just been melting down. So we'll have to wait and see, but this is definitely looking like it has some potential. It is rolling over, you know, confirming bear market right here. So we'll have to see what happens these next couple days. But, you know, if we start to bottom out right here and we can get a potential entry and some momentum back to the upside, this could look like the trade of the month right here. We'll see. Trade of the month. Oh, so Crow, that was one we just looked at. Let's keep on rolling. We'll check out the indexes. Even though Again, reminder, the market's not open tomorrow, but for those of you just tuning in, remember, this is not financial advice. I'm not your financial advisor. The markets are extremely volatile. Please do your own research and trade responsibly. If you did not check out the last live stream, highly recommend it. We did a 2-hour deep dive into how it all works, the whole dynamic of the system in the United States, treasuries, the yields, the yield curve inversion, the DXY, the everything. We just broke it all down, deep dive. I'm going to put out a snippet for that. It's, it's not really a snippet because it's 2 hours long, but, no TA, just straight up explaining important stuff using like Federal Reserve data, inflation, like CPI, all that good stuff. So that is, if there's one video you watch to understand the world, the market, the economy, that's the one. Probably, like, not to toot my own horn, but probably the best 2 hours, that you could spend. I mean, other than like a Netflix movie. But after that, the best 2 hours you could spend, depending on the movie. TNX. So this is where all the pressure is coming from. I mean, we're closing at new highs, new cycle highs. Obviously Fed's coming out, 5 rate hikes, TNX, front running that. Massive pressure on the markets from this. So TLT breaking down now, going back into a bear market. 20-year Treasury bond. This is exactly what we've expected. Excuse me. So we basically had giant head and shoulders pattern. Went sideways long enough, it looked like we were going to try to pull out. But really, what were we doing? We were just fulfilling that 0.5 target. We didn't quite get there here, and now we finally got there. And now we're losing the 236. So the next key level is back down to the neckline. So if we come back down to the neckline, this is going to basically break trend, go into a bear market. And we know that previous times when this went into a bear market, this was 2016 on the daily, and it was in a bear market from basically 2016 to 2018. So like a 2-year bear market. So a 2-year bear market on bonds is going to be a 2-year bull market on rates. So that, just kind of gives us a rough idea. And then that's assuming we don't break key levels and then have like an actual breakout or breakdown. But keep in mind, as old PD Schiff says, bonds are basically reward-free risk. You're taking all the risk with your principal and getting no reward with your interest rates. So bonds are terrible for me. They're terrible, in my opinion. In my opinion. U.S. oil threatening the previous high right here. Looks like this bearish divergence is just like F you. Nobody gives a damn. We had triple bearish divergence. I mean, it fully looks like it is just going to rip to the upside. Could it top out right here and then roll over? Sure. But, honestly, you guys know I'm massively bullish on oil. Apparently, somebody did not want this bearish divergence to play out because this looks strong. Looks very strong. I don't want to just stick with my guns on this and say I think it rolls over, but I really do think it rolls over. I really do. I think it's going to put in another drive of bearish divergence, as crazy as that sounds. We have 1, 2, 3 drives. We have it on the weekly too. And now here we are at that same level with a higher peak. Well, it's about the same actually. And a higher peak right here. About the same, really. So, I don't know. I mean, it looks like it's going to roll over here. We'll see. So VIX basically just trading in the neutral zone. Dow Jones under pressure. Got bought up pretty aggressively. Doesn't look particularly great though. Still has bearish divergence on the weekly. I mean, best thing this can do is basically just go sideways for a little bit. S&P, about the same. Bearish divergence on the daily and the weekly. Same thing. I mean, the best thing these can do is just cool down for a little bit. NASDAQ, got to be real careful of the head and shoulders pattern. Barely hanging on to the 200 exponential and simple. Key support at like 14,147. Russell still trading inside the range, at the bottom of the range, confirming into a bear market. Looks absolutely terrible. Russell will be under 2,000 very soon. Very soon if something doesn't change. Looks absolutely terrible. XLE breaking out to new highs. Obviously, strong play right here with oil and whatnot. New, not all-time highs, but local highs. XLI, again, looks very toppy at these same levels. Bearish divergence once again. XLB. Material looking pretty toppy, but holding these ranges. As long as it holds here, it probably does go higher. Really needs to break above 90 though. XLF financial broke out 2 new highs, came back down, retesting, holding for now, but probably does go down. Again, if it goes sideways for long enough, though, it probably looks good. XLY consumer discretionary breaking back down to the lows. Does not look particularly good. Looks like it wants to go lower. Could have a little dead cat bounce right here though. XLP consumer staples looks strong. I would expect this to stay strong. Losing momentum though. It really just needs to hold above this red support. But I don't know. I mean, it's like a safety play, honestly. XLV healthcare. Healthcare definitely sold off. Barely holding this resistance turn support. Lost 2 key levels right here. If this breaks down, it probably ends up at the 200 exponential or simple, like 130. Doesn't look particularly great. XLU, again, broke out and then lost key support. Bouncing off it right now. Again, looks like it's probably going to retest 200 exponential and simple. 65. It looks like the markets are going to be under pressure again this week. XLK tech is just barely hanging on. Again, if we break down from here, 200 exponential and simple, about $155 is the target. Looks very, very weak. XLC communication, again, very weak. Clear resistance line. Can't get back above 200 exponential and simple. Looks like it's headed down to 71. Stock market looks like it's going to be under pressure. Crypto looks like it's going to be under pressure. And if stocks are under pressure, crypto is going to be under pressure. So looks like there's going to be a lot of downside pressure this week. XLRE real estate. These mortgage rates are rising. Not looking good here. Again, looks like it's coming back down to like 46 bucks. I don't think this is necessarily like a run for your life real estate. Sell your house, sell your car, sell your kids. But it doesn't look great. XTN transportation looks very toppy. This time of year too, we got to be real careful with this one. Real careful. But if it goes sideways here long enough, it could recharge and try to move higher. I don't think it's going to happen, but it could. Hail at support, barely hanging on for dear life. Breakdown here is going to be violent. Initial target like 50 bucks. After that, like high 30s, low 40s. Jets got the measure move breakdown, retesting 200 exponential and simple, clearing the bear market, lost key support. Looks like it's going much lower. I think we hit the 0.5, $18 for Jets. UPS, so yeah, we topped out. This is exactly what I was talking about too, with whatever crypto you have me look at. This is my point. We sell resistance because we just keep coming up to it and it keeps selling off. We buy support because we keep coming down to it and typically find support. So, bearish divergence playing out perfectly. Looks like coming back down. Probably going to try to put in a higher low here. More likely than not, probably comes down to 190. FedEx measure move hit. Looks like it's ready to roll back over. I would expect it back down at like 240 to hold this blue ascending support and our green Fibonacci level. So looks most likely. Finally hit the target. FedEx, the slowest thing ever to hit a target. And again, like having difficulties. FedEx just can't. It literally cannot stop. Can't stop getting in its own way. Absolutely terrible. And then finally Pave. That infrastructure play, this probably does good. If Caterpillar and Deere and some of these other, infrastructure / materials and stuff keep strong. We'll see. This might do okay. Looks weak though. The chart looks weak. Bearish divergence. Looks like it wants to roll over. I think it hits 26 bucks very soon. Is that a buying opportunity though? We'll have to see what it looks like when it gets there. It's so hard to make long-term predictions right now because we literally could be a week away from a capitulation event in the stock market or new all-time highs. It's never been so uncertain or risky. Whatever happens with our next inflation prints or anything like that, just could change the complete dynamic. So just one last thing to look at real quick. The DXY. DXY obviously sold off, finally had that retracement we've been talking about, came back down to some key levels, finding temporary support for now. So we basically had gone sideways forever, finally broke down a little bit. That's good. I think we needed that. We're finally cooling off. The indicators are moving back down. In order to go higher, this thing had to come down lower. And I really do think it's going to be going higher over a longer period of time. So best thing that this could do was to just cool down. It helps other countries cool down a little bit, takes the pressure off them, allows people to get out of some of their dollar-denominated debt, and overall is good for the world, in my opinion, because I really think it's going to go much higher. And if it just keeps melting up, that's not good for people because they can't close their positions or settle their debt. So this is good. But in my opinion, this is like that short squeeze or long squeeze where you have an opportunity to close your position, get out, and then not get wrecked. So, but that's it for today, guys. Appreciate everybody tuning in. Hopefully y'all enjoyed the stream tonight. Gonna go ahead and call it there. Remember, tomorrow is a holiday, so stock markets will not be open. Appreciate each and every one of you tuning in today. If anybody is interested in the group, you can reach out to me. For everybody in the group, I will see you in there all day, every day. And yeah, it's going to call it for today. Make sure you like and subscribe, share it with your friends. Crypto Trend Trader with our Sunday evening market look ahead. It is 9:46 p.m. Eastern Standard Time on January 16th, 2022. Appreciate you, each and every one of you. Love yourself, love your family. Take care of yourself, protect your capital, grow your principal, and make those gains, but make sure you lock them in. Crypto Trend Trader, and I'm out of here.